let's get started. You guys already know Karim and Tom. They've been on numerous analyst calls today. And as I mentioned, Ellie will not be here today. I'm pretty sure he'll be here for the next analyst call. As usual, if you have any questions, make sure you write them down somewhere and then pop them in the Q&A part, and then we'll get to them at the end of the call. Today's structure, we'll be talking about a brief market update. Karim will be giving that. Then we'll be going through some of the key June dashboards. And again, referencing Coinbase and the SEC, a lot of stuff that everybody has on their mind that I'm sure everybody wants to listen to and hear about. I definitely want to hear about it, right? It's really important to me. So I'm looking forward to today's call. Karim and Tom, thank you so much for doing this today and for your time. Karim first, I should say. Why don't you take it away?
Thank you, Kriyan. And it's a pleasure to be here. I think there are a lot of interesting developments that are taking place that, we should just talk about. We should not ignore the elephant in the room anymore. Okay. With that said, we are currently experiencing an industry-defining moment. So the SEC, after almost 2 years, has finally decided to crack down on, it's not officially a crackdown, but they are putting their cards on the table. They have put forward a bunch of allegations against Coinbase and against Binance. So let's just keep things in order. The day before yesterday, the 5th of June, the SEC essentially put forward a civil lawsuit against Binance, putting forward 11 allegations that Binance was allegedly guilty of. From the most important ones, before we delve even deeper into this, it's important to remember that most of the stuff that we will be talked about here, it's nothing new. The writing has been on the wall, and we've been hearing about this for the past 6 months. So there's nothing significant that has taken place yet, but it's very important to monitor the market as we go. So first things first, the SEC has decided this time to essentially include a bunch of tokens and classify them as securities. This is, of course, very important because the ultimate designation of crypto assets as either securities or commodities, that helps us and helps the industry and the market know which regulator will be responsible for essentially regulating this market. So considering that, there's a list of tokens that they have mentioned, including BNB, Solana, Cardano, and Matic. Of course, this is very early. This doesn't mean that those tokens are classified as securities, but this is essentially the case that the SEC is making. The silver lining of the filings or of the legal proceedings is that they have not mentioned Bitcoin and Ethereum. Of course, just because they haven't mentioned something doesn't mean that they are off the hook, but at least that's a good way to think about how the SEC is viewing this case so far. So amongst of the other allegations is that this was unfortunately quite reminiscent of FTX. Essentially, the SEC is claiming that billions of dollars were siphoned out of Binance, but the Binance affiliated platforms, going into essentially an entity that was controlled by CZ. The company was called Merit Peak Limited, and allegedly, based on their case that they are trying to make, funds were siphoned out into his own controlled entity. Again, we don't know how true this is, but we are simply just restating the facts of the case. Of course, if that is true, that is quite catastrophic because Binance is not a small player and Binance is dramatically bigger than FTX. So we will definitely keep monitoring the market as we go in order to have a better understanding of the true facts of this case. And essentially, since the SEC has put forward these allegations, we've seen almost $2 billion worth of assets were deposited into Binance, matched with 3 billion, almost 3.3 billion that was withdrawn off the exchange. We're going to show you this data in the next slide.
Awesome. Thanks, Karim. I always love about on-chain data is because you can track the movement of funds in real time. I think that's really fascinating about you can track the wallets, who is moving the funds in real time and how much they are moving and which crypto they're moving as well. And the latest data is Binance has an outflow in the past 24 hours with 1.3 billion and around 900 million of inflow. And historically, we can also look at the data. Bear in mind that this dashboard only tracks the assets on Ethereum. So we don't track Bitcoin, Solana, Polygon, Avalanche, but then Ethereum is definitely the largest settlement layer, and that's why we're going to cover it later on. But back to this case, we can see the outflow on the 5th of June is around $1.5 billion. However, if we compare to historical value, it is a nothing burger, right? We've seen larger outflow previously during the market crash in the previous months. During the FTX meltdown, we've seen even more outflows. So $1.5 billion is nothing for Binance. And right now, if we go on a wider audience, we also have a Binance Proof of Reserves dashboard, which tracks Binance's balance on different blockchains. So right now, they still have around 46 billion on most of the chains. The largest assets on their balance sheet is Bitcoin, which is around $11 billion. And they also have other assets like BNB, which is their own native token, USDT, Ethereum. If you guys are interested, feel free to check out our two dashboards. We also track other exchanges as well, such as Gate.io, Bybit, but that's pretty much it. I'll hand it back to you, Kareem.
Thank you so much. And just as a friendly reminder for all our readers and listeners, we will attach these links at the end of the presentation. So this will be something that is easily accessible. But yeah, so just to build on what Tom has just said, Binance has almost $50 billion worth of assets. So all the activity that has taken place over the past 3 days does not constitute an alarming figure yet. But of course, we will be monitoring this as time goes through our dashboards and our real-time access to their data. So that's in terms of Binance. So Binance was essentially accused of wash trading. It was accused of commingling of funds and also misleading certain investors about market protections. So that's what was Binance. There was really a lot of accusations going there. However, when we compare this to Coinbase, their lawsuit was really quite limited or focused on two specific areas. First one is that failed to register as a securities exchange or as a broker dealer or as a clearinghouse. It's, again, this just happened yesterday, so we don't have the legal expertise to fully break this down. But again, we are restating the facts. And the impact on why this is important is because essentially the SEC is trying to make a case that Coinbase tried to replicate the services of 3 traditional service providers in the TradFi world. If they do win the case, Coinbase will be obligated to separate over these 3 business operations from each other. So on the second point, the SEC also made a claim that through Coinbase offering a staking as a service, they were essentially offering unregistered securities. And on par with what the SEC accused Binance of in terms of listing those securities, they had a bunch of other tokens here as well. And there are common ones that were mentioned in both cases. So why is that important? Well, staking as a service is essentially one of the core pillars of the crypto ecosystem. If there is not a clear guidelines and established practices for how US-based entities could offer this crucial service to US-based users, this would really put the US out of being in a leading position. Staking is, of course, a huge portion of the crypto ecosystem is based on proof of stake. So this is, of course, very important to understand how are these tokens designated as and what are the best practices. Coinbase made an argument that this is quite different from Kraken, which was served a notice as well to shut down their operations, their staking operations, because essentially Coinbase is making the argument that it's not just offering a fixed APY, they are essentially just providing an adapter that helps users connect to the staking infrastructure. But again, we are going to see how this will play out over the next few days. And lastly, comparing outflows, Coinbase had close to 1.46 billion worth of deposited assets over the past 24 hours, matched with almost 2.6 billion of outflows, assets that were being withdrawn off the exchange. And we have quite an interesting data point about Coinbase's liquid staking solution.
So we can see Coinbase has experienced a huge outflow previously in their liquid staking service. But how big is Coinbase initially in the ETH staking playground? So Coinbase currently is the second largest known entity in terms of ETH stake. So they own around 10% of market share. If you guys remember previously, another centralized exchange called Kraken is also being cracked down by the SEC. So as a result, they are forced to exit the US market. So all the US customers that previously staked on Kraken, they have to unstake all the assets and honor the withdrawals for those customers. And therefore, we've seen that Kraken has withdrawn around 600K Ethereum from the stake network, which is a lot. But if Coinbase, unluckily, lose the case, they might face similar consequences. And as a result, we have seen the first tier of consequences. People are withdrawing or trying to redeem the liquid staking token, CBE, from Coinbase. And therefore, we have seen a huge amount of burn of the liquid staking token here. So that's an interesting data point for reference.
So Tom, let's just stay on that chart, just send a friendly reminder. So for people who are not aware of what liquid staking derivatives are, think of it as an ETF. So creations and redemptions in the ETF space, or essentially you can find the equivalent of them here as mints and burns. So when you mint, you're creating a wrapper, or in the context of crypto, this liquid staking derivative. And on the contrary, when you're burning that derivative in order to get back your original underlying, that would be called burn in the crypto ecosystem. So redemption is burn and minting is creation. And also, it's important to remember that liquid staking solution is not Coinbase's only product that serves its staking sector, but it is quite crucial to use it as a proxy, just to have a broader understanding of how Coinbase is reacting to the developments of these cases.
Guys, can I ask a quick question?
Please.
Sure. In the chart, I show Lido or Lido is number 1, and then Coinbase is number 3, and then it mentioned unknown. Who's that unknown person or entity?
Solo stakers. So these would be the people that are plugging in their own computer and staking their own 32 ETH.
Wow.
Yeah, and there could be other entities that we don't know yet, or we don't know the addresses yet, that would also put into the others category or unknown in that case.
Of course. Just on the topic of labeling, this is all a community effort. There is not really an established and a standardized way of identifying who some of these entities are. So yeah, that's why they could be included in either examples. And yeah, I think we can continue with our breakdown. Amazing. Considering the gravity of both cases, and again, considering that most of the information that was laid out was nothing new, it's still very important to monitor how this case will have an impact on the broader crypto industry. So one of the first things, there's a project called Stacks. Stacks is a layer 2 scaling solution for Bitcoin. So why are we mentioning it? Because Stacks is the only registered token offering that was qualified by the SEC to launch in the US. If the case continues in the momentum of, or let's not use in the momentum, if the SEC does make a really good argument for why some of these tokens might be called securities, Stacks did show the way of how certain projects can be compliant and take down that route in order to become essentially a regulatedly approved security. So that is very important because it does show that there is a possibility for certain projects to take down that route. Of course, it all goes down to how you are designated, either as a commodity or as a security, but it is still very important to be aware of that. Another thing, and over the past few weeks, large market makers like Jane Street, like Jump Crypto, they were already exiting the US market, probably because they saw the writing on the wall and they did not want to put themselves in crosshair of legal scrutiny. So as a result of that, we're seeing a lot of migration moving from centralized exchanges going to decentralized exchanges. Of course, Uniswap is the most prominent example. We actually, just last week in our newsletter, we covered how Uniswap's volume is almost at 48% of the volume that is being transmitted on centralized exchanges. But of course, what just happened over the last few days would definitely accelerate this trend. Liquidity providers would take their assets off centralized exchanges, put it on Uniswap and its equivalent protocols, while at the same time, users do not want to have their assets under the mercy of an exchange. And that's why there is an increasing preference and increasing in volume, liquidity, and users going all the way to decentralized exchanges. So yeah, we're expecting to see more of that moving forward. And then when it comes to both of Binance and Coinbase's response to all the accusations that has happened, Coinbase said we are going to continue business as usual, because Coinbase essentially received a Wells notice a few weeks ago. Again, they had an idea of what they were being targeted for, but after what just happened, now they know what they are officially being accused of. And I think that this will provide clarity for them in order to build a robust case for essentially making an argument against the SEC's accusations. In terms of Binance, of course, it's very serious for them. We don't want to speculate and we don't want to make any predictions for what might happen. But unfortunately, with Binance, there's more unknowns than knowns. So we will have to monitor this as time goes in order to have a better understanding of the scope of the accusations that the SEC has put forward. And because unfortunately, the crypto market had a lot of really encouraging developments last week. So to avoid just presenting the market as all doom and gloom, we are now going to provide you with our on-chain insights around Ethereum, which I think it's been one of the most wonderful exercises that I have done with my mentor, Tom. And I really think that this is crucial for the industry to have a better and a deeper understanding of the ETH economy and the blockchain-based ecosystem.
Awesome. Thanks a lot, Kareem, for the update. And it's a pleasure working with you on this amazing project as well. For the audiences, if you're interested to walk through this dashboard with us, feel free to scan the QR code and then look at the dashboard when we go through the amazing metrics with you guys. But before we go on to the dashboard directly, a brief intro about Ethereum. So why Ethereum is important in the crypto market, right? Of course, the market cap is huge. It's the second largest cryptocurrency in the crypto market. But in the meantime, it does a lot more than just being a cryptocurrency. It is also a settlement layer. It's a smart contract platform. It's the largest one with the most asset under management. Right now, it's around 30 billion, more than 30 billion, I believe. And it runs over 60% of the NFT volume on Ethereum. Of course, there are other competitors like Solana, Avalanche, but then Ethereum is still owning the market share in both DeFi and NFT. And that's why Ethereum key metrics in this dashboard got you covered in all the metrics about the network data, the financial metrics, the DeFi data, and the NFT data, all in one in a single dashboard, so that whenever you have questions about Ethereum, just look at the data directly and you will find your answer, hopefully. And let's move to the dashboard.
Just another way to look at some of the data that we will provide here is that think of it as Ethereum's financial statement, rather than having to wait on a quarterly basis to get the most recent data of how much revenue ETH is making and how much money it's spending on its developers without having to wait. Now, with a click of a refresh button, you have access to the most recent data points.
Exactly. And here is a quick summary of all the metrics here, but then we also have like historical graphs so that you can compare to the data points historically. And one interesting point is the volatility of Ethereum. In the early days of Ethereum, due to the illiquid nature, it doesn't have a lot of circulating supply in the market, and there's not a lot of centralized exchanges, decentralized exchanges supporting the trading activities. And therefore, the volatility of Ethereum is quite high in its early days. But what we have seen is it has been maturing as an asset over time. The annualized volatility has been decreasing, similar to Bitcoin. So definitely for investors, that is a positive sign. And even in the market crash, the volatility level is still decreasing. So that's a really positive point. And also we can see a correlation with other assets, Bitcoin and other layer one, which is on smart contract platforms as well. And interestingly, there's a really strong fundamental case for Ethereum in its circulating supply. So for Bitcoin, as you guys may know, that they have a hard cap of 21 million, right? 21 million in Bitcoin in a total supply. So every 4 years, they will have a halving, which is changing the monetary supply of Bitcoin. On Ethereum, they don't have a hard cap. So in theory, the total supply is infinity. However, they have a different monetary policy. They have the issuance part, which right now is from the staking yield. So every day it will distribute a staking yield to the Ethereum stakers, which is the issuance part. And in the formula, when you're calculating the circulating supply, you will also have the burn rate. So what it means is the burn rate, Ethereum has an amazing monetary supply, which is when a user do a transaction, it will burn part of the fee, so that part of the Ethereum supply will go off the network. It will no longer be part of the network. And therefore, some days, whenever there is a huge amount of network activities on the network, we are seeing Ethereum has been burning a lot on the network, which makes it more deflationary. And why we are looking at the post-merge circulating supply? The reason is, after the merge, not only is Ethereum consuming a lot less energy, which is around like 99% reduction of energy consumption, but in the meantime, the issuance is also greatly reduced. Previously, why Ethereum is issuing a lot of Ethereum on networks, because not only are they paying the ETH stakers the validation reward, but also the block rewards for the miners. But after the merge, there is no more proof of work. So no more issuance for the miners. And therefore, only around 1.7K of ETH being issued on the network for the validators. And therefore, Ethereum monetary supply has greatly increased in a better form. So I'll pass it to Kareem to talk about the other amazing metrics.
Absolutely. Thank you, Tom. And just as a continuation of where Tom just ended, another way to think about burns is buyback programs, how certain companies buy back their stock shares in order to absorb all of those outstanding ones. So yeah, that's just another way to really about the burn. But yeah, as you can see from the burn chart that Tom was just showing, the EIP 1559, yeah, you can see that from the previous chart, you saw how the rate accelerated so much throughout May. This was mainly driven by the meme coin mania. For the ones who don't know what meme coins are, even though I'm pretty sure that this is quite established now, it's all the tokens like Doge and SHIB. So if Ethereum became that deflationary just on the limited activity that was driven by meme coins, imagine how things will be when the bull market returns. Of course, it will completely change Ethereum's monetary supply and doubles down on its value proposition as sound money. So Bitcoin, you have the non-state monetary system, and then with Ethereum, you have the deflationary investment that, of course, can be used to address debasement of our fiat system. So yeah, that's in terms of the burn. I think we can go to the on-chain volume, Tom, to show how DEXs were the superstars of the past year, really. Yeah, as you can see from here, the volume, it peaked, I would say, in mid-2021. And even though it's been falling, like the peaks of the volume has been reducing quite smoothly over the past year or so, when comparing this chart to the centralized exchanges volume, you can see that even though there's a decline here, there's an actual growth because of the migration of users and volume from exchanges or platforms like Binance and Coinbase and whatnot. And when you actually take into consideration how much volume Ethereum was able to process or settle in Q1 of this year, it settled close to $3.05 trillion. That's matching Visa's volume Q1 of this year. If that shows anything, it shows that Ethereum is really starting to prove itself as an incredible, neutral settlement layer that is used to expand the financial system to users who are not really able to leverage the traditional financial instruments. So this is very bullish for Ethereum and for the growth of Ethereum as a smart contract platform. So that was a really interesting data point. And then I think we can go to get the gas consumption to show which type of applications were being used the most. So as you can see from here, this shows a breakdown essentially of what type of smart contracts were responsible for consuming the most gas. As we were just alluding to, in May, it was called the meme coin season. Fortunately, because some of those tokens are only limited to decentralized exchanges like Uniswap, users have to trade on those platforms. They can't use any centralized exchanges in that regard. That's one. And two, the banking failures over the past few months as well. People started fearing leaving their assets under the mercy of centralized exchanges. So people started taking them again on-chain, moving completely on-chain, because in that regard, you're able to verify that your assets exist. It's verify, don't trust. And yeah, you can see from here that DEXs were the leading cause for consuming the most gas by settling almost 40.7% of the volume that was settled in May. Again, I think that was one of the largest percentages for DEXs. But again, it shows how much this industry is changing and the increasing perception of non-custodial infrastructure, the reason for why blockchain and crypto was invented in the first place. Okay, and then the last thing, just to show the activity of the economies that has launched on top of Ethereum. I think the two largest ones are definitely NFTs in the metaverse on one side, and then decentralized finance on the other side. But yeah, as you can see from here, the NFT volume really did pick up a bit this year. However, when looking deeper into it, you would start seeing that this volume is not driven organically. This is mainly driven by protocols. Before we talk about the protocols, there's another excellent illustration of how much of the volume was actually identified as wash or non-wash trade. Over the past year, the wash trade wasn't really that dominant until exchanges started emerging that wanted to eat market share of OpenSea's dominance over the vertical. And one of the ways that they would have done this is incentivize the traders to either use the platform or to provide liquidity on the platform. And hence, if we go back to the previous chart, the one with the protocols, yeah, you can see here that the ones that attracted the most volume were Blur. If you guys remember, Blur had a huge airdrop and incentivization program at the beginning of the year. So they had the most volume redirected to them. We also had X2Y2. X2Y2 also had quite a similar program that incentivized traders. However, it's very important to remember, even though Ethereum is the most liquid and has the deepest amount of integrations and collections, when you really talk about NFTs, you want to access them in an economic manner. And that's why we have other L2s like Polygon, like Arbitrum, like Optimism. They have been welcoming this influx of volume. Because again, as a simple user who is just buying collections, like if we take the example of Reddit, for instance, Reddit launched an NFT collection with Polygon. It was a 10,000K collection. If users were going to pay $50 in order to access an NFT collection that was originally priced at $100, that really doesn't make any sense. And from here, you can see that why a lot of projects and protocols decided to stay away from ETH until it fixes its scalability issues and becomes usable again to the average user, and opt into to use more gas efficient and economic networks like the ones that we just mentioned. Of course, the whole dashboard is just covered with so much information, but to avoid overwhelming anyone, we tried to highlight the most significant or the most relatable ones, just based on everything that has been happening quite recently. But of course, the link is here. Please do feel free to check out the link, and please give us feedback. If you have any suggestions, any other interesting data points that you think it's worth exploring into, please let us know. We are here to listen to the community. And at the end of the day, this is really to help us all grow and understand the blockchain ecosystem a lot better.
Awesome. And at last, feel free to check out all of our dashboards in this link, and also our latest research as well. Sign up for our newsletter, of course, and our latest State of Crypto, if you guys are interested. And now it's the Q&A time. So I hand it to you, Kriyan.
Sure. Just a reminder as well, you can follow these guys on Twitter and LinkedIn as well. You can follow if you will see posts about the latest State of Crypto on there. If you have any questions, we have 2 questions already. So if you have any questions and you've kept them, put them in right now. We still have a little bit of time to answer questions. Let's go with our first question from Diraj Mukhi. He says, whoever wants to answer this, Tom or Karim, any idea why Bitcoin rebounded back to 27K after the SEC sued Coinbase? I was wondering about this as well.
We could make a speculation that essentially certain investors thought that just because Bitcoin and Ethereum were not exclusively mentioned in the court filings of the SEC, then they were let off the hook. Of course, that's not a sound advice, and it's not a sound perception of how this case is building up, but it was an immediate market react, I would say. Tom, did you have anything else to add to this point?
Nah, I think it's hard to guess like what the traders are thinking, right? Like people with size can always move the market, especially with the thin liquidity right now.
Absolutely.
Yeah, I would say. But there is definitely some speculations around the market right now. There are some suggestions on whether, because Binance is definitely not as transparent as a public company like Coinbase, right? In terms of their fund flow, the financials. So therefore, the market react a little bit more when the Binance case were first out. But then when Coinbase case were out, people might think it is an attack to the crypto market in a general. So therefore, they might think it's not a specific case towards those exchanges, and therefore the crypto market may ease up a little bit. So that's, of course, a speculation. We don't have a magic ball, so we can't tell why the price is going up or why it's going down, right? But that's our explanation from listening to the community, I'd say.
Cool. Thank you, Karim and Tom. Great answer and very interesting. Moving on to the next question is from an anonymous attendee. Thank you for asking this question. He's asking, or she's asking, who is sending money to Binance at the moment? If you have any idea about that.
We don't have the capacity, unfortunately, to drill down to the names of the entities. We just don't know this kind of information. We do have the wallet addresses, of course. Like a wallet address does not have to be directly related to a name unless this is on Coinbase or Binance. And then if a regulator approaches the exchange in order to reveal the identity or the information behind this wallet, then it would become permissible. Otherwise, we have to depend on the community's efforts of labeling some of these well-known wallets.
I would say our dashboards can track who is sending money in, like which address is sending money in, but who is behind this address, we can't tell, of course. And when you are using the dashboard, for example, when you're tracking the top counterparties who sent the most money in the past 24 hours, right? We can click in and it will lead you to an Etherscan page. However, a quick tip on analyzing on-chain activities, right? When you first click in and understand who is depositing money to Binance, for example, for a normal user, it is usually go through an intermediary address first. So therefore, what you can see right now is a Binance deposit wallet. It's not exactly from a user, it's a Binance deposit wallet. So if you want to understand who is behind this Binance deposit wallet, you need to go through an additional layer to see who is sending money to this Binance deposit wallet. And then you will get your answer. So that's a quick tip and a quick skill on how to understand who is sending money behind these wallets.
Thank you for that answer, Tom. That is very useful. All right, we have another 2 more questions and 1 comment. Cap10 asks, what do you think about the low trading volume in crypto right now, as volume usually leads price?
It's not a surprise at all. If there's a lot of regulatory uncertainty within the US, and the US does have the biggest market makers of the world, it's not just limited to crypto, that also expands to equities and other markets. It's no surprise that we're seeing less volume and less liquidity. People don't want to risk their exposure right now, and unless there's a clearer path forward, then we expect to see more of this. Even though things are not really, it's not really the same in Europe. Like in Europe, after the MiCA legislation that just went into effect last week, there's now a much more clearer way for the crypto industry to start offering its services across the continent. So we could potentially see a migration of liquidity and volume from the US towards Europe, which is a trend that has already started over the past few months.
Cool. All right, we'll move on to the next question by Andrea Venturelli. Thank you for your question. He or she says, volume on DeFi is huge, but how about regulation for DEXs? The SEC proposed a change in certain terms used in the statutory definition of exchange to include DeFi protocols. How's that going to impact things in the future?
Yeah, that's quite a tricky one, to be honest, because again, we're tech nerdies, we're not legal experts, so we are going to try to give the most neutral answer here. But I would say that essentially the way the SEC is trying to get some of these exchanges to transmit information back to them means that they need to record this information on the chain. And that's not the way the DeFi infrastructure was built, but it's really tricky to see how this can play out. Like the current infrastructure under the current standards for how some of this information should be channeled back to the agency, it doesn't really make sense. And this was already an argument that was made in a congressional hearing multiple times over the past year or so, as the US was essentially trying to introduce legislation around this. So it's quite a tricky one. And I don't see, again, how this could potentially be possible. Of course, there are certain things like KYT is know your transaction. That's the equivalent of KYC, know your customer, the standard in traditional finance. So of course, you could gather certain information about the users, but I don't see how this can be implemented efficiently unless you are not dealing with a permissionless infrastructure anymore. You would be dealing with private infrastructure, things that essentially allows one entity to have the ultimate say of how this network is operating, if certain users can be allowed to enter or join the network, so on. In that regard, it would be easier to consolidate this information like in one location and then share it with the regulators. But other than that, it's challenging to see how this might play out.
What do you think, Tom?
Yeah, absolutely. And I think bear in mind, for example, if like worst case, SEC says that they want to ban one of the largest decentralized exchange, for example, they want to sanction it or whatever. Like previously they sanctioned Tornado Cash, but then bear in mind, it couldn't stop people from interacting with it because it is a code. It's a piece of code, not a company behind that. That's the beauty of this decentralization. It is a smart contract. And therefore, even if you can take down the front end or the interface, people can still interact directly with the smart contract with their own way. So that's a really interesting point. You always remember that.
Absolutely. And that was already the case with Uniswap a few months ago, when certain tokenized shares were removed off the front end. However, for any tech-savvy user who was able to interact with the underlying smart contract, you would still be able to buy these tokens. So that's one of the benefits of the immutability of blockchains, but it can be used and abused.
Fantastic. And that is the last question. We have one of the last comments was from Diraj, who was like agreeing with you. He says, I agree with you, Karim. It would be interesting to see transactions into stablecoins from these SEC targeted tokens. I'm like, oh, I didn't even think about that. That would be interesting to have a look at in the future. Reverend Trelli says, thank you guys as well. Christian also says, amazing webinar. So you guys did an amazing job today. Guys, Tom and Karim, final thoughts for today?
Yes, I do have a final thought. For anyone who is quite scared and thinks that this might be the beginning of the end for the crypto industry, it's quite on the contrary. It's the complete other way around. Some of the topics and issues that are being addressed in both cases, even though we're still at a very early stage, they will really pave the path forward for clarity within the US. We're seeing again that some of the issues within the US are being addressed in Asia and Europe, but it feels like we are finally going to start tackling the systematic issues that is preventing crypto from properly, I would not say integrate with traditional finance, but build more bridges between both ecosystems. And with everything that is happening right now, with the classification, with putting clearer guidelines and standards for how certain exchanges should operate, for the separation of assets and liabilities, all that kind of stuff are really crucial layers for the crypto infrastructure to be built on a proper base. Don't feel overwhelmed, first of all, because we are here for you. We are here to take the overwhelming and then simplify it and nullify it down for you guys. But most importantly, if you really do believe in the longevity and the value proposition of this technology, you should stick around. These will be industry defining moments the next few weeks and the next few months. And we don't know the future, but we do know for a fact that the crypto industry has grown by a lot, and we're so early, and we're really paving the path for this industry to grow and stand on its feet.
All right, Tom from Hong Kong, final thoughts.
Karim has a really amazing summary and ends on a good note. And my last suggestion is just follow our research, follow our dashboards, subscribe for our newsletter, download our latest State of Crypto, and I hope the analyst call is useful, and enjoy your rest of the week, guys. Thank you very much.
Thank you, Tom. And just a reminder to everyone, like sometimes these things are filled with lots of information. If you would like to watch it again, Ellie usually sends these out. So keep a look in your email. This call will also be on the 21 Shares YouTube channel, youtube.com/21shares. If you'd like to go through the questions, go through the time codes, share this with friends or family or coworkers, tell people, hey, you should come and join the next analyst call. Please do. We'd love to have that. Thank you, everyone, for joining. Thank you for the questions. And then we will see you guys again in another 2 weeks.
Thank you for it.